Hello everybody, Carl Keister here at ClearSurf Financial Education. So I thought I would bring a year-end wrap-up since it's the 30th and we have one more day left in the year. But I thought it'd be a good timing because honestly it's been one of the craziest years that I've ever seen. And I'm pretty certain that if you were to say that January a year ago, or this time a year ago, you were to say that we were going to have a global pandemic, the economy would be completely shut down, and yet the Dow somehow manages to squeeze out a 7% return as of today. S&P is up 16%, and the Nasdaq's up over 40%. So, and then we have Bitcoin, which has quadrupled since the March bottom when the market was down 38%. So it's been a very unique time, and I say that because I know there are a lot of people out there that have, in the restaurant industry or the tourism industry, that have lost jobs, and some are losing businesses and even their homes at this point in time. And yet there's others that have been able to work from home and make that transfer to home office and really not miss a paycheck and not miss a beat. So we've got stock markets at all-time highs, Bitcoin and gold touching highs, silver, and it's all based on the fact that there was nowhere else to put the money. With the Fed keeping interest rates so low, very accommodative, that's one thing I think has kept the market from rolling over. I think it's also one thing that's helped the economy to rebound because of all the stimulus money that went out and the Fed keeping rates so low. There was really no alternative to go anywhere else. So people were kind of forced to go into the stock market to get any type of return or play it super conservative and sit in cash, which basically cash pays nothing at this point in time. So very unique times that we're living in. And I've mentioned many times before, the dollar has gotten weaker, and that's because of all the printing that's going on and the national debt now at, as I mentioned multiple times, will be approaching, in my opinion, it'll probably get to 30 trillion by next summer. We're approaching 28 trillion now. But one thing I don't see is this trend changing as far as the work from home scenario. The more and more of the companies I look at and research and read, and some of the people that I get newsletters from that I follow, they truly do believe that this work from home trend is going to continue. And that means more business will be done from Zoom and the teledocs and the DocuSigns, and that this is not just a temporary shift. This is a major shift. We've already seen the shift in online purchasing. That was happening for a while now, and that proof is in the pudding. If you look at a company like Chewy, that IPO'd, I think in the last year, beginning of this year, I forget exactly when IPO, but it's a recent IPO. And at the bottom in March, it was around $25 a share and has now rallied to $100. So that's a massive, 200% return, 3 times your money, 300% return. So those numbers are just huge. And you see this time and time again, Penn National Gaming, anything that was tied to people going out and spending money, the cruise ships, the airline industry, those things have not quite recovered because people are flying more, but the cruise lines, when are people going to get back on cruise ships? I don't know. But like with Penn National Gaming, there's a stock that dipped down to $4 a share, a little bit below $4 a share in March, and then touched $97 before now pulling back into the high 80s. So there's one massive return if you have the courage to buy that on a dip. But one thing it brings to mind is the old adage that Warren Buffett always talks about. Be greedy when other people are fearful, and be fearful when other people are greedy. And right now we're at this point where every day we're hitting new highs, and everyone just seems to pile in, and every dip is just bought. So as we get into the new year, it has definitely benefited you with my motto that I say at the end of every video: if you're a long-term investor, stay long. And as this new year begins, we're probably going to continue. At some point, we will see a pullback. We're definitely at the position where a 10% pullback would be nothing if it happened in the first week, the first quarter. I don't know exactly when that could occur, but I would expect some type of pullback. But with the government printing money, and so far everybody seems to be okay with the fact they keep printing money and our debt keeps going up, eventually that will come to roost. and that may scare some people as far as investing new money at these all-time highs. But this whole work at home theme is really, I don't think it's going to go away. And I saw today that AMC is looking to raise more money. So a lot of those traditional, going out to movies, going out to dinner, I think that's going to be curtailed for a while. And some of those businesses just won't make it. I mean, a lot of restaurants won't make it. Obviously, I read 110,000 businesses have already closed. And, we still have the entire winter to get through. The vaccines that are going out at a much slower rate. We were told basically that there were going to be 20 million people vaccinated by the end of the year. And so far we're at about 2 million. So as the vaccine rollout is slower and the debt keeps rising, businesses are under pressure, all those things, they don't seem to bode well for the market early on. And then we've got this presidency that's going to change hands on January 20th as well. So if something doesn't happen by January 20, potentially, first quarter something could happen as well, where it's a pullback. But I don't think Biden's going to try to rock the boat too much early on, where it's going to impact you and cause another, like we saw in March, a 38% drop, because that was the entire economy shutting down for the first time in the history of the country. So with that being said, I'm going to stick to what I always say. If you're a long-term investor, stay long, stay focused, but definitely want to have a balanced portfolio. As I mentioned, the Dow being up 7, S&P 16, and the NASDAQ 40. We are going to see some corrections. You're already starting to see some of those stocks pulling back a little bit while value is starting to look a little bit better. The Russell 2000 had run up quite a bit, but that's starting to pull back a little bit in the last couple of days as well. So anyway, just a quick year-end summary, if you will. But as always, this is a good time of year to look at what you did last year, what you want to improve on this coming year. And as a reminder, I'll have links down below to my course that talks about how to help you as far as saving money on taxes, budgeting, retirement planning, and estate planning, among others. So check that course out in the links. And if you like the video and the content, please give it a like and a share, and encourage other people that might benefit from these type of videos that I will keep bringing to you twice a week. And we'll have some coming up here soon about the current tax changes, as that's going to be very important with the new president coming in. Nothing's going to change a whole heck of a lot for this tax season, but I did mention in one of my prior videos about how to get the credit. If you did not get the stimulus check in March and you were entitled to it, made less than $75,000 with a valid Social Security number, you can file for your tax this year. You'll be able to ask for that. Recovery rebate credit is what it's called, recovery rebate credit. So if you do your own tax or you take it to someone else and you did not get that check, make sure you ask about that. And check out my prior video. I'll leave some links to it, to the prior video where I talk about that in a little more detail. I think it was the last video. And then also I had links to a Bitcoin video. As I've always mentioned, you want to diversify. And I have a video that I did a few weeks ago. I think it was back on December 11th. I did a video on Bitcoin when it was at 17,000. Today I looked, it's up to 28,000. So it's almost crazily, it's up $11,000. But this just goes back to the proof of you always want to have diversification. And now you're even starting to see some hedge fund managers and billionaires that are investing not only some of their portfolio, but I'm also seeing, I saw Elon Musk the other day, who was on Twitter and communicating with another CEO who invested part of the company's balance sheet cash in Bitcoin. And Elon Musk put out there just, well, maybe we should invest a little bit into Bitcoin. So as more and more of these hedge funds and large money managers, billionaires, such as Elon Musk, people are influential, start thinking more about Bitcoin, it may be more than a one-trick pony. As I mentioned in the other videos, when it went from 3,500 up to, in 2017, 3,500 to 19,500, back to 4,000 basically, or 5,000. And now this year alone, Bitcoin has gone from 5,000 to now 28,000. So 5,000 in March to 28,000 round trip. So Anyway, power diversification, as I've always mentioned, I've always preached to my clients, you want to have diversification. No one can ever see what the next, superstar is going to be when it hasn't even been talked about yet. But either way, stay in the market, stay focused, and Happy New Year. Take care.